Welcome back, everyone. I'm David with Agricultural Economic Insights, doing a part two to this U.S. ag trade deficit story we've been covering over the last few weeks. And what we wanted to do in this article is really set the stage to understand who our key trade partners are and what our key trade products are. So, looking specifically at two charts, it's chart of the week, and I'm cheating a little bit, but I want to share two charts around exports. Of course, Canada, Mexico, and China are the big three buyers of U.S. ag exports. Collectively, they account for about 50%. If you were to roll back to 2010, they're around 43%. So, as exports have slowly increased, we talked about that in our earlier video, as they've increased slowly, these three have represented a larger market share, and that's good. You can see here that in orange, Mexico has accounted for most of that heavy lift. About a decade ago, there was roughly 10 percentage points difference between their market share and Canada's, but the gap has been closing really since 2020, and you can see that's probably a year or two away if the trend continues that Mexico might be our biggest buyer of U.S. ag exports. Now, we group these three together. We, of course, are having a lot of conversations with these three different countries around trade policies and the threat and the rumors of a trade war. But what we buy or sell from these countries varies quite a bit. Specifically, we're focusing on the exports here in these two charts. If you look at the value of all U.S. ag exports, about a third of it is bulk. Bulk exports, I think, are the closest to the farm gate. There are bushels of soybeans, bushels of corn, pounds of cotton. And then the other big tranche of US ag exports are consumer related goods. So you can think about these as things you might pick up in a grocery store. So when we look at trade with Canada, very few bulk exports, much more consumer related exports. With China at the other end of that spectrum, more than 60% of the value trade with China is a bulk export. Very few consumer or intermediate or ag related goods. So I think one of the things that this tells us is in a trade dispute with China, the farm level prices might have more risk, more exposure with China than say Canada. Yes, these are all ag goods and they all work their way back to the farm. But if you think about how much of that value is sort of a farm gate price versus a consumer level price and the dollar that farm dollar that represents, the share of the dollar that represents at the farm level will vary quite a bit. One of the things that stands out here is Mexico might have a little bit more trade exposure than we initially think. So China and Canada are very different, but Mexico is sort of in the middle here, where about a third, very similar to our total world exports, Mexico accounts for about a third of the Mexico purchases are about a third bulk. So bulk accounts for a third of the total activity. And again, a lot of that's corn. There's quite a few soybeans in there as well. But again, the big story here is when we think about these three trade partners, they're all three big. They're all three in the headlines for trade disputes. The reality is Mexico has been our biggest source of gain out of these three, and the composition of sort of farm level products, those bulk exports versus consumer level products, grocery store level products, varies between Canada, Mexico, and China. That's going to be really important to see how this plays out in the upcoming year and months ahead. That's all we have for this week. Until next time, stay curious.